All right. Hello, hello. Good morning. Can everybody see my screen and hear me? Give me a yes or a thumbs up in the chat so we can get moving here before the market opens. Thank you, Williamstown. I appreciate it. Welcome to the stream. Mr. West, welcome to the stream. Thank you. All right. So, big move overnight, which is, if you watch my overnight video, what we expected. If we go to the ES here, they spiked. So this little blue box here is the April lows. It was a critical area of support. They spiked through it yesterday, came back up, tested it, held, and I've been saying for a while I would be super shocked if they just blew through April lows and did not give any kind of bounce. And yesterday I talked about the fact that we were looking for a bounce pretty much all day, starting yesterday, and that bounce, now that it's moved back up to where it has, will likely look like an ABC back into uh, the 5600 to 5800 area, which is where we broke down from. So price action 101, which is taught in my Trade Waves course. More than just 101, but this is 101 right here. You have a breakdown area right here. You can see I just redrew it, but it's already got the line on here. So this is your breakdown area. When they break down or break out from a range, so you can see they had a little range here if you go across. They break down, they're going to come back and test that area. So they can test it from the bottom all the way to the top. So we're looking for a back test of that area, and then how they react from there will be really important for the future, and I mean big time future, where we're talking about possibly over a decade of pain. If they react in a 5-wave move down that breaks or comes down to this low, that is going to be a very, very ugly sign for the bulls. And then we look for a 3-wave move back up and then a breakdown like this. Now, as we've seen since Thursday, bear markets don't always have to follow these paths exactly. They can be more direct. But generally, you get the bounce off of the last level. So you get a bounce, this bounce over here, and then this move down doesn't necessarily have to bounce again. It can be straight down and through. But in general, you're looking at that kind of breakdown. Now, if they get up to this level here and pull back in a corrective manner and kind of hold this April lows area again, then it is possible we could be looking at them trying to break back out over 5,800. And if that is the case, the bulls do still have a path back to all-time highs. However, the break of the April lows, especially on the NASDAQ, is a very big red flag. So that's something to keep in mind moving forward, because this is more of a spike of it, whereas the NASDAQ buried it. So that's a lot of what we're looking at here over the next several weeks to determine the medium to long-term path of the market. If it's going to be bullish, it's a medium-term path back up, and then we're still looking for that kind of breakdown. If it is bearish, then it's a long-term path down. Welcome, Siva, Katz, Sushi, Sam, Daniel's room. There's already a 50% bounce yesterday in the hourly chart. Yeah, we're looking, so you got to look at it in a bigger picture if we zoom out just a little bit here. Number one, the MACD came down to an extreme level that's never been seen except for COVID, which also produced a monster bounce. Number two, you're looking at a bounce from the high, not a bounce from where we are right now or where like a couple days ago. So 50% puts us at the 55 area. So basically the bottom of that 56 zone. And the 618 puts us at 5708, which is right back into this consolidation zone, which is where we would expect them to come to. And typically the 618 is what we're looking at. So anywhere in this 5540, I think 5600 just because it's the bottom of the range. 5600 to 5800 but more likely 57 because that's the 618. Those are what you're looking at. Before we get into trading here, we got about 20 minutes. If you should be able to see it on the screen if you don't already have it. I know many of you are from my room. Our indicator, if you do decide to get the indicator, real quick, you come to this screen, you fill out this form so I can get your TradingView username, and then I give you access to it. And there's instructions. If you don't have a TradingView account, you have this click here to open a TradingView account. This will give you a discount on a TradingView account so that you can get it cheaper. And then as you go down, it'll tell you how to set up in TradingView. It will tell you how to set up the indicator, your day trading strategy, your alternate strategy, and your weekly strategy. I do need to update these videos. You don't need this 3-panel system anymore. We updated it so it all prints on the SPY or whatever chart you're looking at. It does work on any stock or index or future, and it works on any stock, index, or future. That's what I got a little off track there. Any stock, index, or future, and it does work for day trading and swing trading. So both are very powerful. If you look at the volatility in the market, you know, yesterday you had this buy signal all the way down at the lows down here, right here. That rode up all the way up here where you got a sell signal way up here, a sell signal here, a sell signal here, buy signal down here. I mean, well, we don't trade after 10 o'clock, so right here was our last set of trades, and they were both winners. We actually had a double win on this one because it moved up, hit our price target, pulled back, stopped us, but the setup was still bullish, so I re-entered. We got a second win on that particular move. So really great day for us yesterday. I wasn't in on Thursday or Friday, but if you go back and look, Thursday and Friday were incredible days. This was a 5-point move up, a 5-point move down, and then another 5-point move 5-point move down. Then we were done on Friday. Sorry. On Thursday, we had 3 5-point moves. 5-point move down, 5-point move up, 5-point move down, where you hit a sell right at the top, a buy at the bottom, and a sell at the top again. Again, we don't trade after 10 a.m. And here's the thing about the indicator, guys. There's a little set of rules you need to follow, and it's not hard. The rules are very basic. Number 1, you get in as soon as you see the buy or sell. Number 2, you don't trade past 10 a.m. because trading gets very choppy after that. You really want to trade in the morning if you're going to day trade, or wherever time zone you're in, but morning in America anyway. And you want to take a small win early, like 20%, which, by the way, if all you made was 20% on your money, you'd be doing great. You take 20% and then you let your runners run, and then you set really good stops. I usually set them at about 50 cents on a normal day. And what I mean by that is right now we're at, say, 518.95 on the SPY. So my stop would be 518.45, 50 cents lower if I was going long, and if I was going short, it'd be 50 cents higher. So when we have increased volatility like we have right now, you can move that to 65 to 70 cents on your stop because you're going to see a lot more wild swings, and you don't want to get stopped out as much. You're still going to get poked out sometimes. This is part of trading, and that's really how it goes. One of the big things to understand is that this indicator is going to have losing days. It's even going to have losing weeks, and you're going to see, I'll show you the results of last year, losing months sometimes, not very often. We had 9 winning months, 3 losing months last year. Right now we have 3 winning months this year, and April's off to a great start. So trading isn't about having every trade be a winner. And if you think that way, or you're looking for a silver bullet, or you're looking for a get-rich-quick scheme, this ain't it. You're in the wrong place. This is about disciplined trades with good stops, good money management, and taking the indicator signals and following the rules. And if you do that, it prints money. It's an incredible tool. It is not a magic bullet. There's no such thing. No one has the key to whatever every move in the market's going to be. If they did, they'd be a billionaire. And that's just it. So if you use good money management and good trading skills, you will make money using this indicator. Give me 1 second here. I will get an update for you. 1 second. Now we are live streaming, but live streaming doesn't mean it's happening as we speak. We do have a delay on the stream, so you will be a little late when trades come up, unless you have the indicator yourself, which is a great thing to have. You get a 30-day free trial, and you can download the indicator or get the indicator on your chart, try it out for 30 days, and if you don't like it, we do a money-back guarantee on it. So just a few things to keep in mind. Grabbing a quick update here, and then I'll put it on the screen for you. We are always improving the indicator, and you'll see that here in the results that I post on the screen. So here is the last 2 years, well, last year and this year. You can see that last year we netted 35,000, and that included having the worst month we've ever had. November, for whatever reason, was just awful. Low volume trading, which is a lot of November because they get to send a holiday trading the second half of November, is really hard. So November and December are always going to be our worst 2 months. But overall, this is based on 25 contracts in a $100,000 account. We netted 35.47%. So if you had 100,000 at the beginning of the year, you had 135,475 at the end of the year. This year, you can see we've made some tweaks, and we're already seeing better results, incredibly better results. January was a record month. February was another incredible month, but then March again was real close to the highest month we had all of last year. Last year, our best month was 10,000. We've already had a 14 and a 9 this year, and we're already at $29,000 profit. So you're already up 29% on your money while the market's down 12, 15% on the year. So incredible results of it if you just follow the rules. You just got to understand there's going to be winning and losing days, and that doesn't mean that it doesn't work. It means that you had winning and losing days. You're going to have trend days. Trend days are awful day trading days. So we may have that today because we've started 200 points higher, but there's a lot of volatility in the market. So we'll see if we can get some good trades today. Last Tuesday was an incredible trading day for us on the live stream. Hopefully today will be too. Last time you said wait till Friday when swinging, when exiting, etc. You got a LS signal on Wednesday. Do you wait till Friday to exit the trade, or you exit when the stop appears? Okay, so that is going to be specific to your risk tolerance. So let's say, let's take a look here. Okay, let's go back and look at the weekly real quick. We got about 15 minutes. So I swing trade off of the weekly, which means we wait till the weekly signal closes. Our last sell signal came in on Christmas week, and it came in at 594, and you had to sweat it. I mean, there was no stop here. There was no, hey, you need to get out. There was no panic from the indicator that had you lose money. And swings, I'm out several months, by the way. I don't want to be, for the weekly swings, I want to be out. So this was in December. I would want to be out till at least March or April at a minimum. But more likely, I'd like to go out to June and do a little further out. I'm looking for several 100-point moves when the weekly swing hits. Right here, you had a sell signal. It went up a little bit, but then, a few weeks later, you're down here at 494 off of a 510 entry. So 16 points down, you're going to make some money there. 160-point move in the ES. So the way the weekly works, let me explain that first. You get a buy signal or a sell signal. So in this case over here, we got our sell signal. As soon as you see the opposite, so this is your SS, this is a sell stop. So this week you got a sell, and then this week the market said, or the indicator said, hey, it did not come to fruition as I wanted, so you need to get out. But what that means more importantly is you flip too long. So you don't do that on the day trading. You only do this on the weekly. So you get a sell stop, you flip back to long, and you get, this really awesome move back up. Then you get this sell, you get this awesome move down, you get this buy, you get this awesome move up, you get this sell, and you've got to take profit. The same rules apply, right? So when you get this move down, you should have taken some profit, especially off the 21. The 21 is that's the blue line here. That's a huge place to take profit. And then you need to set stops after you make profit. So can the market keep moving in your direction after you get stopped out? Of course it can. That's going to happen. That's part of trading. But your risk tolerance, I never let a good trade go bad, which is to say if I made money here, I'm never going to let this stop up here play out and cause me to have a losing trade. But up here, you would have switched to long, and then you would have got this sweet ride up here. You got a nice run down here, and it said switch to long. You would have got a nice run up. So the last sell was here. I'm not sure what you were trading that you got a stop on, because we haven't gotten a stop on this yet. You'll get a buy signal, not a stop. But the last sell was here, and you absolutely crushed it down to 483 off of 594. So over 100 points on the SPY down here, which is 1,000 points on the ES. You don't get the LS and SS. You might need to go into your settings right here and make sure they're checked. One thing people ask quite a bit about is the blue and red, the crossover and cross under alert. I turn them off. What that is it's going to be a squeeze indicator that's inside of this that tells you when a squeeze is occurring, where the blue squeeze is up and the red squeeze is down. But it's not there yet, so I don't want to use it. So just keep those unchecked. But you need to make sure you have L stop and S stop checked here. As long as you have that, you should be getting them on the screen. So on the weekly, you enter at the end of the week. You can wait, depending on where your trade's at, but I don't reverse. So this sell, for instance, you got this sell stop here. You can stop out of your trade, but I wouldn't get long until the end of the week and I saw the actual sell stop close. But again, that's going to be up to your personal risk tolerance. Did you short at the weekly sell signal in December? Where did you place your stop in case the market continued into new highs? So two things. I was out in December. We did short and we did make money, but it was late. So the week of Christmas to New Year's, I'm out. So this was an unfortunately timed sell signal for me. But on the bounce back up, I did get in and we did make money on this move down. And then I don't remember exactly where the stop was. We did short here, though, and made some money on that move down. They are checked, Sam. Then try uninstalling and reinstalling. Sometimes TradingView gets a glitch in it and needs to just you can go in here and hit the trash can and then just go back and put it back on, and it should be fine. And then as far as stops go, I don't have a stop when I first enter. I wait for this is the only time I personally use the stops is on the weekly. I have them built into the system for people who aren't experienced traders, so they have an idea of when to get out. But I don't use stops on the weekly until I get a sell stop, unless, this is a great example right here. So this entry right here, this one, okay, I wouldn't have stopped out here because until I get the SS, I'm not stopping out. And then they ended up coming down and hit the 21, where I would have definitely taken some profit, probably closed half my trade there, and then had a stop, wherever it made sense coming back up. It's not going to be a price for me. It's going to be it's not going to be a SPY price. It's going to be an options price. So I would have never got to this sell stop up here. But until I see a sell stop, so for instance, here on this trade, this one is another, you take a profit and you might have got stopped out here and then they came back down. But until you see the stop, you don't need to stop out unless you've taken profit and are ready to, be happy with that profit. It was an individual stock. Yeah. I mean, that Daniel, that's going to be, or hiding in Daniel's, or that's going to be, again, your risk tolerance. If you were already in the money, then it's a great place to, you should set whatever stop works for your risk. Some people like to say, if I made 20% on the move down, I'll set my stop to break even on the second half and net 10% if I do get stopped out, if that makes sense. Now, you only get 30% off while the live stream's running. So this monthly 30 coupon you can see on the screen, you can use that. Actually, let's go look at that real quick while we got 7 minutes here before the open. If you go to membership plans and you click on the indicator, you either click here for the monthly, here for the yearly, right? 2 months free on the yearly. I very, very, very rarely discount the yearly. I gave 10% off a couple weeks ago because you're already getting 2 months free and you get a 30-day money-back guarantee, and it's just a really powerful tool. I don't really need to discount it. But you click here, and then it'll bring up the entry form. So a couple of things that are a little bit tricky, okay? First thing is to put in the coupon. There's have a coupon right here. So go ahead and click that, and it'll open your coupon code box. And then type in your monthly 30. And hit enter. Oops. Did I not turn it on today? I'm glad I did this. Hold on 1 second. I forgot to turn it on. If it comes up red, then it's not working. Let me get that taken care of really quickly here. Oh, I know why. It's because I'm on the, it's turned on. I'm on the yearly indicator. That's why. So your monthly 30 is not going to work on the yearly. So monthly 30, hit enter. It'll tell you that it's in. You can even scroll back to the top. And right now it'll still say $5.90 because it's $5.90 for the year. But this will change and tell you what the coupon did right here. And then at the bottom, this is the tricky part. Some people get really stuck here. You don't put in your credit card or payment information here. You just select what you're going to use. So you can either use PayPal or a credit card and then hit sign up. And on the next page, that's where you'll put in your credit card. Okay. So that's only going to be during the live stream. Once the stream ends, you'll have about another 30 minutes while I get everybody caught up that got the indicator and get them signed in. And then I go turn it off because I just appreciate people being on the live stream. And that's the bonus of doing that. So just keep that in mind if you want to get the indicator. Is there a bear market in the NQ100? The signs are there, yes. I won't 1000% be on board until I see the bounce and how it comes down off the bounce. So we're in the middle of the bounce now. I went over that in the beginning. If you want to go back and check that out, it's the same thing on both charts. So the paths I laid out on the ES are going to be the same for the NASDAQ, only you're looking at the 19,500 to 20,500 area for the bounce on NASDAQ. Our first major resistance is going to be at 525. Our next major resistance is 530 today. And given that we're up to 3.5% already, we may see a trend day. But if you look at Thursday and Friday, we were down big percentages, and then you still got great trading. So hopefully we'll get good trading today. And then you need to understand what you're looking for when you trade. So right now we had a sell. We got a sell stop right here. And this is pre-market. We don't trade this, but this is how you understand what we're looking for. At the open, we're going to be looking for a sell signal. Maybe not the first candle, but somewhere around there, maybe off of this level right here, 525. Looking for a sell signal because we're already in a buy, so we're obviously not going to get another buy signal, so the first trade's going to be a sell. Setup for the indicator. Let's get that going. We'll expand our screen here. The setup, you do need real-time data for the ES and NQ, and that doesn't mean, that's not a standard package. The standard Trading View package is 10 minutes delayed. You have to buy an add-on. It's the CME E-mini included. It's $7 a month, and that gives you real-time futures data, and you have to have that. And the reason you have to have that is when you look at our setup, so it's watching the CME Mini and the ES and NQ. And what happens is, one of the ways this indicator is powerful is its price action, but the other is if the SPY is doing this and the NQ is doing this, they're out of sync. So you're not going to get a buy signal here or a sell signal here because all three markets are not in sync. And you want broad buying or selling in the market. You want them to be buying and selling everything because that creates momentum and that creates very powerful moves. And that's what we're looking for, and that's how we find tops and bottoms. One is price action because we're looking at support and resistance levels, and the other is confluence between the markets. So you'll need those things. You'll need your pre-market data set up. So this blue over here is post-market. The yellow is pre-market. That's just how TradingView separates the midnight line or 4 o'clock line whenever it turns back on. But you need that on because it sets up the indicator for regular trading hours and gets you and can tell you where you're going to be to start the day. In this case, we're looking for a sell signal to start the day. So keep all that in mind when you're getting set up. So what I do is I'm going to go ahead and have a put trade set up. And I'm going to just keep adjusting my strike price as price moves. But I don't want to have to see the sell signal, then select a price, then type in my buy, then try to get in wherever I got to get in. I want to have all of that set up, so all I got to do is click go, and I can get my trade in as fast as possible and get the best price possible. So I'm setting all that up right now so that I'm ready to go and prepared for the day, as opposed to missing 20 cents of a move because I'm not prepared. And in day trading, 20 cents is a lot. Now, another thing to keep in mind, these are all just general trading tips. A very volatile market like we're facing today, you have super high options prices. So I trade down, meaning I normally trade 25 contracts, and right now I'm going to be trading about 10 because prices are $5 an option at the money, and that's a lot. Normally they're about $1 to $2. So we're looking at something along those lines or we're looking at reducing our overall risk by reducing the number of contracts because options prices are so high. I'm going to be a little bit out of the money as well. So normally I'd be right at the money. Like right now, a put would be 522. I'm actually going to be at 521 at the moment, which is about one strike out of the money. And then I'll continue to move that as price moves. While we wait for trades, please type in your questions. Let me know what you're looking for, and we will try to answer them as best we can. So again, my stops will be a little wider today because there's higher volatility, and I don't want to get poked out right away. Should be looking for a sell signal fairly soon here. Assuming the bears can get any kind of follow through. If they continue to move down here, we should be looking for a sell signal. I've moved my strike to 520 now because it's looking like they're going to be a little lower before we get a sell signal. Do we still use the LS and SS for day trading? You can. Like I said, I don't personally because I set my own stops, but I did build that in for less experienced traders to use, and they are welcome to use that. I use about on normal trading where volatility is normal, I use about 50 cents on the SPY. So again, right now we're at 520, we'll say 25. So my stop here on this short would be like 520.75. However, because we are in a high volatility environment, my stop would be more like 521 should we get a sell signal. Now we haven't gotten a sell signal because conditions aren't right for a sell yet. So until we get that, we just wait and we will enter when we get one. Good morning. I recently subscribed to the indicator. I am loving it. What are the red and blue dots? I explained that earlier in the stream. They are squeezes, but they are not ready for use. They were written into the code. They're being updated. The blue will end up at some point in time, hopefully being long squeeze identifier, and red being short squeeze. However, they're not ready for use, so just uncheck them in the settings. They're the crossover and cross under alert, and that way you don't get confused by them. Now, because of the powerful selling that we saw Thursday, Friday, and a little bit yesterday before they started to bounce, it is very possible we get a pretty strong trend day today. We're already 3.5% up. So continuation here would not be surprising at all. And trend days are bad days. This is not necessarily a rule, but it's something that I use. And when we start to identify a trend day, I use the 3 strikes and you're out policy. So the first thing you want to identify is, where's my key levels at? Why isn't that on here? The first thing you want to identify is the, there we go. Why that came off my chart. Overnight high and overnight low. So the pre-market low was down here. Pre-market high is here. We want to see them continue. Okay, we might get a trade here. I'll go back through that later. Moving my strike to 519. When you get such a strong buying movement, it does take a while for the sell to kick in. And I will also warn that high volatility days can be hard because of the moves up and down being so quick. You can get stopped out on your initial entry a few times, which is super annoying. But it's high volatility, so when it does go, you get really big payouts. But I like to lay down all of the things because I don't want anybody to be surprised by anything or to think I'm trying to hide anything. I don't operate in that fashion. Okay, there's our sell signal. We're going to go 576 here with a 519 strike. And our stop is going to be 519.50. This is a tough entry because we're right at VWAP in the 21, but they do plow through that sometimes. So at 576, what's that? $1.14, which is 690. 690 is what we're looking at as our first exit. So hopefully we can see that. There's going to be a lot of support right here. So if we're not at 690 by the time we get to 517 here, I will probably take some profit at that level. It's a high volume level. You can see that they chopped around it, so there's a very good chance of a bounce when they get back here. So if we get to that level and we haven't hit 690, I'll probably take some there. We are, as I said, very close to VWAP. So that does make it tough to get through on the first try. You're usually going to get a little bounce off of that as well. So hopefully they can kind of press down here and give us the payout first, and then, you know, if they're going to bounce it back above VWAP, do that. The black line on my screen is VWAP. The blue line is the EMA, exponential moving average 21. It's a huge level. You can see it bounce off of it all the time. If you just look in the pre-market, it bounced off of it here, it bounced off of it here, came through, got back above it, held it right here, bounced off of it here. So it's a great place to look for support and resistance. If you're below it, coming back into it, it will bounce down. And if you're above it, bounce back up. Where do I live? I don't know what that question means. Trend days are good for me. I'm a swing trader. Yeah, it makes sense. I'd like to see this candle close down near or on top of VWAP so we can try to get through. That would be the ideal. Or under. Under is ideal, but you don't want to see it run away back up, because then you're just getting a spike down to VWAP test and then continuation of the trend. As you can see, there's a lot of volatility in the movement here. Lots of 20-cent moves on these bounces. Yeah, they're going to try to bounce this off of VWAP here. Hopefully they don't, but we'll see. Hang in there. Not a horrible close. They're going to come back and test it again, which I like. They didn't run away from it, so you don't want to see a candle. I don't have one. Well, candle like here where they touch it and then just two green candles run away from it. So they're going to come down and test it again. I like that. We'll see if we can power through down to at least this high volume level at about 517. But right now VWAP is holding, so that is going to be tougher for our trade. Yeah, there it went. Okay, we got stopped out. 535 is what I got. So if they continue down here, this is what I was talking about with volatility days. You get these spikes and then continuations. It can be a little tougher. Stop to 535. And then we'll get ready for a re-entry here just in case. If they do give us a new sell signal. So there's a lot of confusion around this. What you're not going to get at this point in time is a buy signal because it's already in a buy. So what happens is the indicator is price action and forward looking, right? So it knows that the market is in a buy cycle. It's looking for weakness and reversals. So it's looking for this sell to continue. It's not going to issue another buy cycle here because we've already kind of exhausted this buy move. So what it's going to issue is a stop, a sell stop, which is continuation of the buy. Okay. So you get a sell stop, which means they're continuing on the buy cycle, and it'll reissue another sell when it thinks the time is right. A lot of people think that we're supposed to get a buy here if they race it another 100 points higher. Well, the buy came back here. They found weakness here. You got, a few point move down, which was good. It issued about 517. They ran it down to 515. So that was a winning trade in the pre-market. Of course, we don't trade that. We don't trade the pre-market. But it never had enough to say that we were done in the buy cycle. So it issued a stop instead of a buy. And here you're getting a stop as well. So you're not going to get a buy once the buy cycle was already running because it's already told you we're in a buy cycle. Right now it's trying to tell you we're going to sell that buy cycle. And then what happens is you see the market reverse into a sell cycle and go. And that's just how the indicator is built. That's how we designed it. So it's trading on price action. We basically rejected near yesterday's high, which is a place I would expect rejection. But because the buy cycle was so strong, we didn't initiate a sell until we were closer to VWAP, and VWAP's hard to get through. And once it does, though, you can get a cascading effect. So, like I said, there are times that people think we should get a buy or a sell, but that's just chasing. There is a strategy, and we were talking about trend days earlier, so while we're waiting for any other trade to come through, we were talking about trend days. And trend days tend to stay above the 21 in VWAP, back tested, and all back tests tend to hold, right? But that doesn't mean you can't get winning trades because they can come all the way up here, then back test down here, and then continue. So there are winning trades in there. They're just not as good. And trend days are less common. So more often than not, you have days that have highs and lows like this. And those are great trading days, and that's probably 8 out of 10 trading days. Trend days tended to go more like this, where you got small pullbacks and continuation. And sometimes these initiate sells here because more often than not, we're not going to break through the resistance. But all it's doing is looking at resistance, looking at the cycle, saying it's exhausted, and saying we have a chance for a reversal. It looks at 150 things, but I'm summarizing. Actually over 150 things, but I'm summarizing that so that it's simple. So trend days are not the best trading days because the indicator doesn't chase. It's not looking to chase. However, if you think we're in a trend day, there are a lot of people who, like on the weekly, use the same strategy. They take a sell stop and say that's a buy signal and then get long. I do not. I don't chase. I don't like to chase. The move is already 165 points up. And that doesn't mean it can't go another 165. It just means I'm not chasing now. I'm waiting for a setup for a better spot. But there are lots of people who like to use the strategy that the sell stop is a buy signal or a buy stop or a long stop is a sell signal on trend days. Again, to identify a trend day, they're going to get above the pre-market high if it's going up or below the pre-market low. They're always going to hold the 21 in VWAP on pullbacks. And that doesn't mean they hold it like they did here. This is a great hold. This is a great hold. They can spike below it like they did here and then continue on. And once you kind of identify that, and usually it's identified by saying we get above the pre-market high, reverse, hit the trend or hit the VWAP 21 and then continue. That's going to be identified as, and take out that high. That's going to be identified as a trend day pretty early on. So you make a high above the pre-market high. You test VWAP and the 21, you hold, then you take out the high you made. That's very, very, very commonly a trend day. And on those days, on any day, if I have 3 sell signals that fail or 3 buy signals that fail, that's 3 strikes and you're out. And then we just wait for the next day because it's a better day. It'll be a better day. Over trading, boredom, and lack of knowledge are the three things that destroy accounts. And chasing, those all destroy accounts. So we try not to overtrade. We try to take great trade setups. We have good stops. And if it's not a day for trading, we don't trade. Your sell signal comes after a 40-point SPX drop. However, the red inverted triangle, because it's placed right at the top, gives you the impression that the short is right at the top, which it isn't. I never said it would be right at the top. That sell signal we got in right here at about, I don't know, 519 or something. It pushed down not far enough. I mean, you can only put it somewhere, and you got to put it where the top of the bar is or the bottom of the bar is. Nothing's perfect. I mean, if you want to come in and try to say that I'm giving you false impressions or fake ideas, I'm not. I tell you the winning trades. I tell you the losing trades, and I don't shy away from them. We have a lot more winners than losers, and that's just the way it is. I mean, I don't understand the comment there. Has there been any sell side restrictions in place that might be fueling the rally? I'm not sure what you mean by that. The rally is fueled by the fact that the market is extraordinarily oversold. It hit major support. I've been saying a long time the April lows should hold, and they did barely. I mean, they spiked through them pretty hard, but they immediately recaptured them. So that's what's fueling the rally. If I read your chart correctly, then you have a sell signal right now. We do, but we got stopped out on it, so it was a losing trade for us. But if this sell stop comes up and holds, then we will have probably a new sell signal issued at some point. But yeah, I mean, if they continue down, I mean, that's part of trading. You get in, they spike you out, and then they continue. The market is nothing but a series of traps. People say that the market's manipulated. That's not the case. You are manipulated. The market's doing what it's supposed to do. So what the market does and how the market works is once you sell so hard. So for Thursday and Friday, we sold straight down, right? And even yesterday, we sold down at the open. We were sold way down, like 200 points or something. Well, once you get down here, everybody wants to sell and nobody wants to buy. Well, if there are no buyers, you can't sell. You have to have buyers to sell the market. So the guys who want to move the market, your institutions, your billionaires, your hedge fund managers, the guys who want to move the market and continue to move it down can't do that. So what do? They reverse on everybody. They put in the rally that we're seeing today. They stop everybody out. They use you as liquidity. Then people start to get bullish again because they're seeing a rally and they say, okay, well, maybe it's time to buy. Then they can get buyers back into the market, and then they sell into those buyers. And the same thing happens in reverse. All they're doing is manipulating people. They aren't manipulating the market. They're manipulating you. Your emotions play tricks on you and make you think that because we went down 2% in a day, we're going down 100%. Well, that's not the case. It's just not. Market doesn't move in straight lines because it can't. It's impossible because you just have too many buyers. You run out of buyers and you run out of sellers. It's exhaustion. I realize you can't be perfect. Your winning trades outperform your losing trades. Some folks have a hard time understanding such an obvious fact. Thank you, Johnny. There are going to be losing trades. If you watch the beginning of the video, guys, this isn't a get-rich-quick scheme. This isn't a every trade works thing. This is if you follow the rules and use the indicator, you will make money. I have every trade listed. I showed you the results. I'm very upfront with that. I teach good, disciplined trading habits because that is what destroys accounts. Bad trading habits. That'd be boredom. That'd be no stops. That'd be thinking every trade's going to be a winner. Chasing. Emotional trading, all of that. I don't ever get emotional about a trade. We lost that trade as part of it. We'll get another trade and it'll be great or it won't. But I sized down today because we have very volatile trading. The options prices are outrageous. So we don't want to be in big positions. We want to be in smaller positions because the market's, if you're right, the market's going to move a lot in your direction. And that small position is going to make just as much as a big position would on a normal day. So you're having abnormal trading volatility right now. If you are still sizing really big and you're on the wrong side of the trade 3 times, then you're getting smacked in the face too hard. But if you're on the wrong side of the trade and you're only doing a 1/3 size trade, which I'm doing, then it's not that big a deal. You have to adjust to what the market is telling you. Trading is about discipline. Everybody wants to be rich tomorrow. That's not going to happen. Are there some guys that, got super lucky on a trade and put their whole life savings into it and it went up 20 points and they doubled it up? Yeah. I will also tell you those people will be broke someday because they don't understand that that's not how it works. Making manipulation great again. True that. IMGA. SSR stocks thought it meant sell side restricted. Oh, that I don't know. I trade mostly the SPY, honestly. Um, so I don't know if anybody's been restricted on what you can do. Um, I don't trade day trade many other stock. I don't. I just don't trade anything but the SPY. So I'm not sure about that. I can't speak to that. We are approaching yesterday's high at 523.12. We didn't quite get there here and rejected. They just weren't able to follow through to get past VWAP. So if they take out this high right here and hit that, the next test of VWAP will be pretty important because if they make a high here and then come back and test and hold, then we're looking at a likely trend day that will continue higher. And guys, if this is either a bull or bear market rally, it's one of them. Bear market rallies can be extremely, extremely powerful. I warned my group yesterday that if you were trying to short this market on Monday, I would be very cautious because bull market rallies are explosive and the next bar went up, 80 points or something in 5 minutes. I mean, you don't want to be on the wrong side of those kind of rallies. And that's, again, once you get through 3 days of selling down 10%, 12%, whatever we went down, the market's going to bounce. I mean, you're stretching the rubber band to its extreme, and it either breaks or bounces. And given where we were, it needed to bounce. So I was warning my people to be very cautious about shorting yesterday. And remember, guys, going back to the question or the comment where the sell is at the top of the bar, we get in as soon as we see the sell signal. So we don't wait for this bar to close because very often the whole trade is in one bar. So you get in, let's say the sell signal initiated right at the top. It didn't at 520 and came down here to 517. Well, if you did, that whole one bar would have been a winning trade, right? So there's lots of times that happens. You get a sell right away, the bar runs down, hits VWAP, you take your profit, and it bounces out of there. That happens a lot. So we don't wait for this to close because a lot of the move can happen in that single bar. I mean, it was a 30-point ES drop here. The sell isn't wrong. It just didn't follow through. And you've got to move so far in these high volatility, high priced markets that you need follow through. Oh, poop. If you're in my room, guys, I'm so sorry. I'm doing many things at once here, and I realized that I put in a call trade uh, for that last trade. I just saw that because that was my mistake. So if you took a call, you're probably not mad. Um, but I apologize for that incorrect entry there. When I'm live streaming it, it is a little bit difficult to keep up with everything. So I do apologize for that if you're in the room. That was not my intent. All right, so they're coming into yesterday's high, so this is going to be a great place to look for rejection as well. They're also, now they did reject it right here and pulled back and are coming into it, so I would want to look more up here at 525 for rejection, honestly, because they've already weakened this area, pulled back off of it and showed strength. So I'm not sure yesterday's high will hold directly. It could, it definitely can. This could have been this is very often a trap. You get people in, come back up, and then sell. But we have made a high. We are above the pre-market high. So now any test of the 21 and VWAP, if we can get a hold and a push back up over that, will likely lead to a trend day for the day. Now, I get we're already in a trend day because we started up 180 points, 160 points, whatever. But continuation of the trend, because you can obviously get, right, you can get a gap and crap, or you can get a gap and go. For trading purposes, we like gap and crap. All right, struggling a little bit here with yesterday's high, so we'll see how they react if they're able to get through. We would assume they would be. This is what we would look at as a start of a C wave of A. So if we zoom out just a little here, if we can, I don't know if we can get it all on the 5-minute chart or not, but we'd be looking at this overall as an ABC up for A. So you'd be looking at this, like this being A, and then a B wave pullback, and then C back up toward that 5600 to 58 ES area. That would be what I'd be looking for, and I'd like to see them hold this 530 call resistance here. So if you have that 530 call resistance hold, you got your C wave in play, or C wave of A in place, then you're looking for your B wave pullback, and then you look for C back up to hopefully that 5600 to 5800 area. And at that point, we'll probably look to short the market in a pretty good way, pretty far out, with a running long hedge on that. For some reason, I'm not seeing the sell signal on my chart. Try uninstalling and reinstalling Pivot Point Pro. There's TradingView, especially when things get crazy and more people log in. So anytime the market moves a lot, TradingView gets overwhelmed and their servers get overwhelmed. It's not that they can't handle it. Obviously, the data is coming through, but things glitch when that happens. And so it may have glitched. You just have to reinstall it. I assume you're seeing the other sell signals. Does the indicator use the Mentor Q levels? No, those are just good reference levels to have. Anytime you see a signal off of a call resistance wall or a put resistance wall, that's a good good place to be, but no, it doesn't use those. Don't forget the monthly 30 coupon does expire after the live stream ends today. Um, so let's, if you're interested in using that, make sure you do it before we get out of here. So right now, the primary thought is that it's going to be a trend day. The reason being, if you just look at the pre-market, we held VWAP 21, held over the pre-market high. Confirmation comes with a next test and breakout. Otherwise, we get a failed breakout. And that's what if you're trading, that's what you're looking for. You're looking for failed breakdowns. You're looking for failed breakouts. Those are incredible things to have happen. And what that means is they tried to break out here. They came down, bounced a little, and then lost it. Closed that last candle basically at yesterday's high, which is bullish, and now following through, which is more bullish. Now, if you use that aggressive strategy today and took the sell stop as a long, you did all right there. Again, that's not my style, so I don't do it, but any risk strategy you're comfortable with that makes sense is good. And that's a major part of trading is there are, infinite ways to make money in the market with various trading styles, whether it's options, buy and hold, different types of option sets, futures, shorting, longing, condors. I mean, you can literally do anything to make money in the market as long as it's a good setup. You use proper stops and proper discipline and proper sizing, you'll do fine. You have to use those things, though. You don't have to trade the same as me, but you have to do those things. VWAP is different. Can you use the setting? Show my settings. Yeah, it's the standard. I don't change anything on it. It's going to be your session, HLC3, and then whatever the standards are. You may have the bands on. I don't use the bands. I just use the center point. So if you want to, maybe you have those on. I don't know. All right, let's see if we get a put here or short. I'm at 521 on my strike right now. A little bit out of the money for cost. Q's big megaphone on 4 hours. Could top of megaphone target be Elliott wave? Target be based on Elliott wave count? Yeah, there's still a path back to the highs. I just don't think it's the primary right now. If you use corrective depth theory, the April lows were a major wave 4, and they, a larger degree wave 4 should not go lower than a 1 degree lower wave 4, and they did that yesterday by a bunch on the NQ especially. So generally, when that happens, the more probable thing is the market's not going to make a new high because it's a change of character in the market. But that's what everything is built around, right? So, when people criticize Elliott wave theory, they don't understand that it's just a whole bunch of probabilities. For instance, the probability of Duke winning the Final Four game on Saturday with a minute to go in the game was 92%. 92%. That's highly probable. That means that's the most likely outcome. Did they win? They did not. Shit happened. So all you can do is play the probabilities and say that 92 out of 100 times this is going to happen. 8 times this is going to happen. Can this 8 thing happen? Yeah, of course it can. You get aces versus kings pre-flop in poker. Kings are going to win sometimes, even though you had the best of it. That's what trading is about. You take the high probability route, and sometimes that high probability route isn't going to play out. But if you keep taking it, it will play out. And that doesn't mean that they're going to win 92 times in a row, Duke, or that the aces are going to win, 66% of the time, 66 times out of 100 in a row. They may lose 20 times in a row and then win 150 times in a row. If you flip a coin, you're not going to get heads every other time. You might get 20 heads in a row and then 30 tails in a row and then one head, one tail, one head, one tail. Probabilities are just that. They're probable. That doesn't mean they're exact or they're guaranteed. And that's what people don't understand. When we make a quote-unquote prediction in the market, and then I give 2 outcomes, I give you my primary path, and most primary paths are around 65 to 70%, I would say, that they play out. Well, 65 to 70%, if you play those consistently, will make you money over time if you do what? Does anybody know? Can you give me the things? Use proper sizing, use discipline, use stops, and understand where you're wrong. It's a simple thing if you get down to it. People just can't get their head around not letting emotion be part of the day. Things are going to go against you. That's just how it's going to go. And if you can't handle that, do not trade. Just buy a stock that you like and leave it and walk away from it. %90 of the game is emotion. 10% is your setups and stuff. That's why if you've taken any of my courses, the very first thing in all of them is psychology, and I warn that it is the most important part of trading. The most. And there's not a close second. You can be a really bad trader, but have good emotional control, and still do better than a really great trader with bad emotional control. So you got to break above the morning high. So here's your morning high. You got to break above it. They back tested it. Now they're back testing it again. If they break below that, then it's very likely we come back down to test VWAP again, and we'll see what happens there. Or at least the 21, maybe not all the way to VWAP. Jacob, Brad here, just checking out the live channel. Since using the indicator, nothing but consistent profit along with my own system. Officially just semi-retired. Keeps me from overtrading. That is the best thing I can hear, Brad. That is amazing. I'm really excited for you. I'm glad it's working and you're using it well. If you just follow the rules, guys, it prints money. It's a incredible system. I'm speaking about it myself because I built it and I know it, but you just heard Brad say it, and I'd venture to guess several other people would say similar things. Well, I know they would. I get comments about it every day, and that's my favorite part. You know, I can trade on my own. I don't have to have a group of people, but the fact that I get to trade on my own with a group of awesome people and then hear their success stories is what it's all about for me. It's so much fun, and it's a great group to be in. I love that, Brad. That's amazing. You made my whole day right there. It don't matter if we go 0 for 3 on trading. I had a great day. Helping people understand the facts of how to trade and seeing them implement it and change. I've had so many traders tell me I've never made money in the market, and now I was able to have my wife take off 3 months with our baby because I could afford it, because I've made money using the stuff you do, and blah, blah, blah. I mean, it goes on and on. And those are, I mean, in a world where nobody looks out for each other anymore, I think we need more of that kind of stuff where people are helping other people and want to help other people, and that's where I'm at. So that's why I get semi-offended when people say stuff is misleading, because that is the furthest thing from what I am. I'm pretty open and honest. I share pretty much everything. My mistakes, when I make mistakes in the room, you get them right from me, right up front. I made a mistake. That could be a semi-topping candle, but I don't think so. We'll see. If they can push down here and break down below its low, we've got a little hanging man up there, but haven't got the indicator yet. New to trading, more interested in longer term recommendations of how to use the indicator for broader timelines. I have a day job, so not interested in day trading. So we do have swing trading. Obviously on the live stream we can't do that because it's just a few hours of trading. But the weekly chart, some people use the daily. I prefer the weekly. I think it's more consistent. The daily's fine though. You get the signal and then you set the trade, and then it'll give you the stop, and you can, there's a whole video on how to use it once you get it. If you want to test it out, again, guys, 30-day money-back guarantee. What I tell people is if you're not sure, go ahead and get it and just paper trade it so you don't lose any money if you don't like it or it doesn't fit your trading style or anything else for 30 days. Don't use it for 2 days and have 2 losing days, because that's going to happen, and then say it doesn't work. Use it for all 30 or 28 or wherever you feel safe to get the refund. Paper trade it if you want, if you don't want to use it for real money. See if it works to your liking. And then if it does, keep it. And if it doesn't, you got the money back guarantee. No problem. Glad you're here. Thanks for joining the stream, everybody. All right, let's see if they can do something here. We're getting a little bit into lazy mode, and lazy's not good for shorts, which means the trend day is still much more likely. You never want to really short a dull tape, and not that it's dull in the sense that it's not moving. They're moving it. But it's dull in the sense that you're not getting any two-way action. We got a tiny little test of VWAP at the open. Now, so trend days are not good day trading days. I can't say that enough because people don't understand it and they overtrade them really badly. Is there still money to be made on a trend day? Yeah, like right now, they can still do this, come back and test a VWAP, and that's going to be, 523 down to about 520. That's a 3-point move. You would make money on that trade. And then if they continue on in the trend, that's fine. But you really don't want to be over trading on these types of days because the general trend is up. And if you're not already long, you don't really want to chase, especially coming into this high volume. So this is a high volume level. This is where we would expect some rejection. Doesn't have to be a huge rejection. It can be, like I said, a back test of VWAP and then back up. Greetings from Portugal. I have some Portuguese people in my room. Very great people. I'd love to go to Portugal. I've been to Spain. I've been to Rota. I was in the Navy. Didn't get to travel Spain much, but it was a beautiful place. I'd love to go to Portugal. Portugal looks beautiful as well. How do you identify it as a trend day following an upward sloping channel? If you rewind about, 20 minutes or so, I kind of explained it in depth, but essentially you're looking for continuing hold of the VWAP 21 lines, a move over the pre-market high, so that tells you they're breaking out of the overnight range. A back test, once they break out over the pre-market high, a back test of VWAP that holds, and then take out that high. So if they stopped right here, pulled back, and then they come back and take out this high, that is very, very likely to be a trend day. Barcelona, best place. I flew into Barcelona. I didn't, and then they rowed me in my ship. I wasn't able to explore it at all. I'd love to go back and go through all of Spain and Portugal. It's a really beautiful country over there. The drive from Barcelona to Rota, there was these sunflower fields that just went on for miles. It was crazy how pretty they were. Hopefully, guys, I know we only had the one trade today, and I don't know. Hopefully, we'll get a couple or a couple that work anyway. But hopefully, you've gotten a lot of information and learned some things here. Other than that, I try to fill the voids with training and things that help people understand the market better. There's no sense in just sitting here watching and waiting and not helping people. Learn something about the market anyway. Try to provide some value. Overall, as I said at the beginning of the video, if you got here late, I did do an overview of the ES and where we're at in the beginning of the video. Overall, I am looking for a bounce to 5,600 to 5,800 overall, so about another 300 points up. But I would expect it to be in an ABC form. So at some point here, probably at around 530 or so, that's the call wall for the 0 DTEs. We would look for a B wave pullback that would be in 3 waves. And then we'd look for a start of a C wave up that would take us up into that 5,600 to 5,800 area. And then again, from there, that's a place I'm looking to look for a short in the market. When you think of your trade size, do you base it on percentage of your liquid trading assets, downsize in these markets conditions? I can imagine. Yeah, I would say after the video, go back and watch the beginning. I talk about the fact that right now, especially because we're in a high volatility market and options prices are really elevated, I downsized. So normally I trade a 1/2 size trade on day trading, which for me is 25 contracts. But right now, because prices are so high, I'm trading 10 contracts. Because normally I'm getting options prices for, normally I get options for $1 to $2 an option, and right now they're going for about $5. So that's 4 times the price. So I've sized down, because when you're wrong, I mean, you're going to be wrong. That's just part of trading. You don't want to get smacked in the face on high price days, because that amplifies your losses. So if you take a normal loss today, it might be a 40, 50 cent loss on an option trade, whereas normally it's a 20, 30%, 20 or 30 cent loss. So you're getting almost double the loss. So you don't want to have the same trade size in, because it skews your overall risk reward, and you don't want that. So, while it's true that if you're right, you would amplify your gains, you're still over risking there. I base all of my trade sizing on percentage. So the basis I use, my account's different than this, but the basis that I use is a 100K account. You trade 1 to 5% depending on your risk tolerance. 5% would be more of a full size position, whereas 3% would be a mid-size position, and 1% would be a cautious position. 3% of a $100,000 account is about $3,000, which on most days can get you about 25 contracts. So, I'm usually 3 to 4% on those days, just depending on normal days, just depending of my total account, of my total account. Now, I always base everything off a 100K account because of math. Okay, we got to sell here. We're going to go 521 at 305, guys. And our stop is going to be 523.90. And we'll see if we can get some follow through back to VWAP here, make a winner, and then see if they got anything else left in the tank after that. So we rejected off of that high volume level exactly. Got our sell signal, and now we'll see if we can push down here and make a winner. I'm also a few strikes out of the money. On normal days, I am at the money. But because of the, again, volatility, the market should move pretty well in whatever direction it's moving. So I'm okay to be a couple strikes out of the money and still do okay on the trade. It's not going to be as good as at the money, but it does save us some cost up front and allows us to exit a little earlier. Did you use the AT&T phone on the Navy ship, the Silor phone? We had a satellite phone. I don't know who made it or what it was, but man, it was hard because there was like a 5-second delay between the time you said what you said or they said what they said, and the information got back. So you were always talking over each other. It was really, really annoying, but we did have a satellite phone. Very expensive. Another indication of a trend day is if you use Thinkorswim and you use the ADD, they're up around 2100 on the ADD, which is extremely bullish. They're also extremely bullish on the VOLD. So that does indicate we are likely to trend. There's our stop. Unfortunately, we got out at 296. 296 is our stop. So that one wasn't too bad because of how we did it. That was a 9-cent loss. Unfortunately. But hopefully a lot of people are on here. I know people struggle with trend day trading, and hopefully they're learning how to handle it. That's 2 sell strikes, by the way. So if we get another sell strike, we'll be done for the day. We just don't want to overtrade and try to catch something that isn't there. We got to sell off of a high volume level. That's going to play out more often than not, but on trend days, which are, again, lower probability, it's not going to work out. So they're going to come right back to this high volume level and try again. Hopefully we get one more shot, and I'd like it to be at 530. If they can get up there and give us a sell, that would be ideal. Well, it came right back in here. Let's see. Let's see how they handle this high volume level first. They got to get through that before anything else. Do you keep track of all your trades in TradingView? No, I use Thinkorswim. I keep track of all of my trades on a Google Sheet, though, just like you do. I have a spreadsheet. I showed it earlier. So, just so you guys know, I give this data because it's summarized, but I'm going to do something else here while we wait. So I'll give it one more time for anybody who joined the stream late. You're going to have winning days, weeks, and months. You're going to have losing days, weeks, and even months. Shouldn't have losing years if you're doing it right. But you can see December and November sucked. And March was a slight loser last year, but we ended up on a 100K account, 35% ahead. This month or this year, first quarter, we are already up 29% based on a 100K account, which is absolutely killing. And the market's down 10 or 12%. So we're outperforming the market by 40%. Now, just so you know that these aren't just numbers I typed in to have something on there. One, they're accumulated by one of my users, so he does the math on them. I have them too, but if you watch my videos, you'll see a clip in there or a quote from Matt that tells all these numbers because he wants to verify what I'm saying, and he's the one who does that. And if you go in here, I'll just show you, like, for instance, this is it's gonna be too big to put on in one clip, but I'll show you what I got here anyway. So you know that I have the documentation. Here's half of January's trades. And you can see there's winners and losers over here. Minus 38, minus 20, minus 18, minus 27, minus 30, minus 20. I mean, it's just part of it. There's going to be winners. There's going to be losers. But our winners heavily outweigh our losers. And, that's about half the month of January's trades. So, we are... this spike up is so annoying right here. Damn it. See, now, this spike causes emotion. It's going to cause people to potentially chase here. And I won't do it because I know how this goes. They don't manipulate the market, they manipulate you. And they do that by saying, oh, we're going to be bullish. They stop out all the shorts. Then the bulls get back in, thinking we're going to go long. Then they come back down. The shorts want to get back in, and then they get bullish. It's just a series of run backs. They're going to come down and most likely test VWAP or the 21 here, or both. But there are just times that you get stopped out. And some people are much more aggressive than me. They would have put their stop up here. For me, that creates too big of losses when you do lose. The system that I have set up is set up basically like this. So you have your baseline and you have your stop area. Okay. And then we take our first profit at about 20%. So you have your win area. This first take area right here in general cancels out the losses. Then when you let the second half of your trades run, this is all profit. So these tend to cancel out these. In general, of course, it's not exact, but in general, there's the cancellation of these trades. And then all of the runners, which are quite many, that's where all the profit comes in. And everybody's like, I don't want to scalp for 20 cents. Well, 20 cents is $500 when you trade 25 contracts. So $500 a day is a pretty good day. And depending on your account size, maybe you can't do 25 contracts. Maybe you can only do 10 or 5 or whatever. But if you accumulate, the power of compounding is important. So if you start at, say, 20,000 and then you work your way up to 40,000, well, now you have double the income, so you can double your contract size. You get up to 60,000, you have triple your starting income, you can do, or your starting capital, you can do triple the size, and so on. So you'll build up to those level of contracts, but trying to trade them all up front or trying to trade your whole account up front is a disaster. So all they're doing here with this chop is making it hard for entries. People are going to get stopped out on this spike. They're going to get stopped out on this spike. And they keep spiking them back and forth here before they make their move. In general, you would expect a high volume level to hold and this to come down. So in general, that would be the case. However, given the metrics of today, I'm not so sure that's going to be the case. And if we go in, we'll go in one more time. I'm going to repaste this. I think I still have it on my clipboard. Let's see. Paste. Yeah. So if we go in and just generally look, because of how I do my stops and how I do my stuff, here's your loser, 8%. Here's your loser, 20%, 22%. 27% is a high one. That's a big loser. 12%, 19%, 12%, 11%. 16%, 15. They're all basically under 20%. You're going to have some bad ones in there where the market just moves too fast. But winners, 40%, 90%, 34%, 31%, 56%. The winners run, the losers stop early. That's the whole deal. And then you have your smaller winners, like your 7%, your 11. These all cancel out the other ones. So it's not about winners and losers. It's about methodology, good entries, good setups, and good discipline. That's it. Do you invest in Bitcoin? I'm sad about Bitcoin. I have a buddy, a good friend of mine who is a Bitcoin master. I mean, he told me to buy it at 600 and I did. I did buy it at 600 and I bought 10 of them. I bought $6,000 worth. Very speculative because that was back when Bitcoin was nobody. They were coming up and people were raving about it, but I was like, I didn't understand it at first. I had to get some information. I don't invest in what I don't understand. So I talked to him for a long time. He said, just buy it, put a small amount in there that you're not afraid to lose. He said, but it's going to 100,000. And I said, that seems aggressive at 600. So let's just talk about where it's going right now. And I did some stuff. And so when it hit 20K, I sold half of it. And then when it hit 14K off of 20K, I said, that's enough for me. I'm good. And I sold the rest. Then it went down to 5K for a while. And then it went to 100K. And that made me sad. But I did really well on Bitcoin. I just, I think I did fine. I just, for me to believe in 100K at that particular time was a little rough. So he was staunch. He said the entire time, when it went back to 5K, I said, did you sell? He said, no. I said, what are you doing? You gave up all that money. He said, no, I didn't. It's going to 100K. And I said, all right. And he was right. But he was actually hired by a bank in Dubai to go out there and run their Bitcoin investment trust. So, I mean, he was a super expert on it. I enjoy these live streams. You teach me well. Oh, well, thank you. I hope you guys are getting value, even though the trades aren't going our way right now. That's part of it. But these are the days, these are the days that you need to see and understand so you can see how losing days work. Everybody knows how to win. That's easy. It's how losing days work. You cut your losses, you get out, and you try again. And you don't get emotional about it. You don't get tied to it. You use good sizing, and you wait for the winning days to outweigh the losing, which is going to happen. It always does. I always tell so I tell my traders, because I know that even though I talk about it nonstop, they still overinvest, overtrade, over everything. Not all of them, but they're it just happens. And I tell them, when we're on a winning streak, don't get too high, because what happens is you think you can't lose and you overinvest and you hit the losing streak, because there's going to be losing streaks. There's going to be winning streaks. That's just how trading goes. Don't get too low when you're losing. Don't get too high when you're winning. Just use the same methodology. HODL. Yeah, that is the story about every trader of Bitcoin. I don't know if the Bitcoin story is over. I go over it on my daily call almost every day. They do have the opportunity to go to 115, 130. I do think they're running into a bear market soon, though, a bear Bitcoin market. So two things happen. This is here we'll do another training thing on moving averages. There are two ways moving averages get hit, like this, straight down into them, straight back off of them, and then the other way is like this, where price stays the same for a while. They chop up all the traders, and the moving average moves up to price, and then they move away from it again. So right now we're in a chop fest off under a high resistance level, which is currently a good sign for the bulls because they didn't fully reject. It tells you the bulls want to break through here and are outweighing the bears. Because if the bears were heavy here, if the bears were sitting heavy right here, which normally they would be in a normal trading environment, we're in a little different environment right now. So if the bears were sitting heavy here, you would generally see this. Now, if they stay weak and the bulls can't get through, you can still see that. But generally, consolidation means the bulls are putting up enough of a fight to wear down all of the sellers here. Eventually, the sellers will cave, and you'll see a breakthrough. Now, if they can't get through, you'll see a meltdown. You'll see a big breakdown. But one or the other is going to happen, and this is how squeezes happen. So a squeeze occurs when you get to a resistance level, right? You chop. All of the sellers here are trying to sell off of this level. The buyers are trying to get through. Once the buyers get through, all of these sellers have to close their position, which is effectively buying the market, because when you close a sell, you have to buy the market. And then they want to get long, so they buy the market again. So that's two buys from the same person, because they want to get on the long train, plus the buyers are still buying. So you get what's called the squeeze, and that's what drives price higher and creates squeezes. So that's why these call resistance and put resistance levels are so important, and these high volume trading levels are so important, is that the gamma on those is where the market makers know that this is the biggest level. This is the biggest level of calls here. And they know, the market makers know, that if they get above this, they have to hedge against, because when you buy a option, the market makers are selling you that option, right? So if people are buying and they're trying to, the market makers know that this is a huge call area and they've sold all these calls to people, well, they can't let this go up or they'll lose all their money, right? So they have to hedge. So they have to start buying calls. The people are buying calls. There's a huge call wall here. So there's a ton of calls of open interest. And then the gamma explodes, hits the accelerator, and you get a gamma squeeze. Even on days like this where there's not much going on, I appreciate conversations. I learned a lot. I'm glad to hear that, Juan. That makes me very happy. Something I can't understand is how the 10% who own the most shares agree to make the market go up or down. Do 10% pick up the phone and all just agree? I'm not going to tell you they don't. I can't tell you what exactly happens. But the market makers are the ones who are moving the market the most. And the billionaires and the hedge fund managers and the institutions know this, and they trade with it. And I'm not going to tell you they don't all collude, because if you've watched Dumb Money, you'll know that they do talk on the phone about what they're doing and why. But I can't, prove that or anything. Are we in the start of a multi-year cycle, fourth wave? I think decade, but yeah. I can't confirm that 1,000% yet, but they did break the April lows, which is a very, very strong indication of such a thing. I do think this bounce would likely take us to 56 to 5,800. And then from there, we'll see what kind of breakdown we get. Now, it doesn't have to go to 56 to 5,800. They could stop here, for instance, if they want. Be a very shallow B wave, uncharacteristic, because two things have to happen. Number one, the market has to heal after a whole lot of selling, because there's just not enough seller or buyers of the market to continue for the sellers to crush them. So if you only have one side of things, you can't move the market. In other words, if everybody's trying to buy and no one is selling, then you can't move the market up because you can't buy from anybody. If everybody's trying to sell and no one is buying, you can't move the market down because nobody is buying from you. So the market has to heal. You have to create new sentiment. You have to trap some people. You have to create liquidity. You have to get to a point where the market can move again, and then you can take it down further. So it would be a pretty shallow bounce here because I just don't think there's enough liquidity to do that. But it's certainly possible. There are still people out there saying buy the dip, and I don't think they're going to be wrong in this particular instance. They might be wrong on the next one. At least for, if you bought it at 4,800 and it goes to 5,600, that's a good buy the dip. But you have to have the market heal, for one, and then you have to create new sentiment for two, and liquidity so that they can move the market. Okay, we're back testing here. So this is going to be a critical point for today. Unfortunately, our sell got stopped out, even though they did still come down and test, which is super annoying. We would be at a winning trade right now. But that happens, and you can't get mad at that, and you can't get short now. We're already back at support, and this is the worst place to short. Even if they break through and you're right, all you're doing is reinforcing bad habits here. But this is heavy support for two reasons. One, it's the prior breakout area. Two, it's the 21 moving average. So you don't want to be shorting here because the more probable thing is that they're going to hold. Now, can they still break down and you win that trade? Yes, but all that does is reinforce a bad habit and say, see, I told you they were going to go down or whatever. And then you're playing against the odds. You're playing against the house at that point. And that's just not where you want to be. The house may lose a hand, but they're not losing overall. Do you use Flow, or is this Mentor Q indicator all you use? I mean, how well does it show weekly options, or is it just 0T? So I don't know what Flow means, if you're talking about options flow, I think. But so Mentor Q is really good at the option stuff as far as identifying the levels. That's why I use them just as a general support resistance on my chart. It has nothing to do with my indicator. My indicator is completely separate from that. But when I see a sell off of an HVL or a call resistance, or I see a buy off of an HVL or a put support down here, those are high probability trades. They don't always work out. Obviously, if you looked at the put resistance or put support over the Thursday and Friday, they all got mowed down. But they are generally levels where the markets want to defend themselves. And so you usually get a decent move off of those levels. So when I see a sell off of a level like this, I generally think more highly of it than, say, a sell off of a random area. Not that these don't play out and win. Quite often they do. But these are much more accurate. And you see here, even though we got chopped out of here, they chopped us back up and then came down. Um, the sell did the sell was overall correct. The sell signal was correct. Our trade got stopped out because of how we played it. Again, people who are more aggressive than me may have had their stop higher. But for me, I showed you why our losses are so small. We want trades that are going to be quick momentum trades. We don't want a bunch of chop first because of one, we're doing 0 DTE, so you got time factor. And two, you don't want a bunch of chop because if you're wrong, then you really get eaten up on price. And we don't want our losses to be big. And I'm okay with missing a move to save on a 30% loss or a 40% loss or a 50% loss because those are crushers. So even though this move turned out to be in our favor and we didn't have it, I'm okay with that. You can't get emotional about that because that's just part of it. I mean, there's just things are going to go against you or be wonky or I can't tell you how many times we've been stopped out by like a penny and then the market goes the other way. Super frustrating, right? But what are you going to do? You can't chase. You can't continue to re-enter because if you re-enter, you get chopped out here again, then you try again, and then you lose and they go up. Well, now you've got 3 trades that just lit you up for no reason instead of just missing one move when another trade will be coming soon, right? There's just no reason to worry about a trade you missed. There's going to be another one in 15 minutes or another day or another hour or another week. It doesn't matter. I like your name, Want to Be Diamond Hands, because there will be a lot of talk about weak hands and strong hands, and they definitely want to shake the weak hands out as often as possible. Um, and generally, in most cases, we avoid that. But there are times that, our stop was here at the top of these sets of bars, and that was going to be the stop that it was. And they spiked it out and then went down. If you have diamond hands, you might also lose double instead of losing what what your risk tolerance is or what your risk reward ratio is. Don't get me wrong, guys. There are plenty of traders out there better than me. There are far more worse than me. But I make money in the stock market on a daily basis, and that's better than 95% of people do. And in day trading, it's upwards of 90% fail rate because people can't handle the swings, the emotions, the stops, the setups. They just can't keep it all together. 90% of day traders are failed traders. So you only allow one stop out per signal. That depends. So not necessarily. So Cody, your question, because of how the bars work and how the system works, so as soon as it starts to see a sell happen mid-bar, then you see the sell signal flash, right? That's when we enter the trade. So we enter the trade. Sometimes it goes down, and then there are times that they stop us out and like give us a little. For instance, let's say the sell was on this bar, the screen bar here, the one with the big line that went up and came back down. So let's say that the sell happened here, and they spiked it back up to here. The sell went away and stopped us out, and then came back down like this, and the sell hit again and then closed with a sell on it. I would likely re-enter on that same bar or same signal, if that makes sense. I hope I'm explaining that in a way that makes sense. Diamond handing not for 0 TTEs. No, it is not. No, people who want to prove their strength of holding against the trend on zero DTEs often go away with nothing. I've learned a lot of lessons. I've traded for 25 years, and I've blown up accounts. You know, when I first started trading, I was just like everybody else, thought I was going to be rich in 2 days, thought I knew everything, blew up accounts, got really frustrated with it, stopped for a few years of ever trying to swing or day trade and just bought stocks, started learning more about it, started understanding, and then really learned about emotion and psychology and stops and how to use them properly and how to understand big picture instead of one trade. And once I was able to implement that and some other things, you know, I use, you know, meditation and other things to keep myself pretty calm while the day's going on, because there's just no reason to worry about a single trade. And once I figured all that out, the whole world changed. And I still, honestly, I didn't day trade. I swing traded for a long time until I met up with a very, very successful day trader and talked to him about his strategies and stuff. And then he helped me with the indicator and putting it together. And once I understood that day trades aren't, so most people are so oblivious to how day trading works. 20 cents to 50 cents to 80 cents on a day trade is an amazing trade. You do better than that, you're just blowing it out of the water. You're not looking for a $6 win on a day trade because there's only about 7 of those a year, and you have to stay in the whole time to get it. And you know it's a really hard thing to do. So you're looking to consistently put together wins that outweigh your losses, and those wins can't be too big because you're just not going to get enough of those moves. People think that the market moves. First of all, back 20 years ago, the market didn't move 100 points in a day. It moved 10. I mean, that seriously, a 1-point move in the SPY was a big deal. And now today you have a 15-point move in the SPY, and I realize we're in a volatile market and it's a little different. But this stuff didn't happen 20 years ago. So it's a very, very different game, especially with online trading. Online trading really changed how the market was looked at and viewed, especially from a day trading standpoint, because you didn't have to be on the stock market floor trying to trade. So it was a big learning curve to figure all that out and understand that a 50-cent win on a day trade is a huge win. It's a great thing. More than that is all gravy. And I'm not saying we're targeting 50-cent wins. We've had lots of dollar-plus wins. Yesterday we were up $2. You know, today we're down 30 cents, 40 or 50 cents because of the higher elevated options pricing. So, you know, it would take 4 days like today to counter Monday. And, you know, if you had a better stop here, maybe you had a winning day today. I don't know. I personally didn't. So the good news is if they can sell a little further, maybe back into support here, this high volume level at about 517, we can initiate a buy signal. Now this is concerning like for the trend day, I mean, that they've broken through the 21 in VWAP, that we could be seeing a little bit of a breakdown here or a lot of bit of a breakdown. The next major area to hold, you can see that they fought it here in the pre-market, and they held and then pushed above it, was this 517 area. So if they can sell down there and bounce, we may get a buy signal and run it back up and continue the trend. You know, a little midday dip, but we'll see what we get here. How's the swing trading doing? Is it worth entering in some way at this point, or should I wait for the next one? So I'm looking to get long on a pullback, but not. So swing trading for me is about one of two things: either the weekly signal on the indicator, or a setup that I like, because I've been a swing trader for a long time, so I have a lot of setups that I know are good. So if I get a B wave pullback, and I'm giving you just this isn't exact pricing. If we get a B wave pullback here, what I'm looking for is a 1-2 setup like this, where my stop can be here. My entry is going to be off the bounce here, so I'm looking for a 1-2 and then a start here. And then I can play it two ways. I can have a very conservative stop right here at wherever the bounce started, or I can set my stop at this low, depending on how far out I'm going. If I'm going further out, I may use this low. If I'm going on a shorter time frame, I may use this low. But I'm looking for a setup. So, man, this bar is so annoying. I'm looking for a setup, and that is the basis of all swing trading, is a setup, or the way we built the indicator, it also gives really good entries. So that would be my next look for a swing trade, is long. And if it doesn't appear, I'm not going to chase. So I'm not going to, in other words, if they come down and they don't give a very good bounce or any bounce, and they're down here, well, I'm not going to chase the downside. That's just an area that you miss. But given the overall setup, I'm looking for one of those two things. So this is, and these happen. This is a case where the indicator's right. It gave you the sell at the exact spot, but our trade was wrong. And that happens. You know, our stop just didn't hold. And then the move happened. The indicator saw the weakness. They just spiked everybody out real quick and then went down. So unfortunately, we didn't catch that. But again, indicator spot on with the top. So ES has moved into a sell cycle now, but NASDAQ hasn't. We need NASDAQ to be a little bit weaker here, a little bit more weakness, but they are coming into this high volume level. So may or may not get a buy signal here. I'd like to see a little lower, maybe a spike at this high volume level and then go, and that will get the NASDAQ into a sell cycle. And you guys can't see this. I can see it because I own the indicator. I can see it on the back end and how it works. As of right now, we're getting into 8 o'clock here. My group will still trade for another 2 hours if there are signals. We're going to wait here on the live stream and see if they can weaken here and give us a buy signal. Given that ES went into a sell cycle, this would not be a terrible place to, if you get a sell stop, to get long. But NASDAQ did not enter a sell cycle, so you're not going to get a buy on the NASDAQ. As of right now. Not yet, anyway. You can use the indicator on anything, Cody. NQ, NDX, Nvidia, Amazon, whatever. Bitcoin. So just from a chart perspective, this area right here, even if this HVL wasn't here, which is a high volume level for anybody who joined late, you can see that this is a very strong area of support. They pushed through it, back tested it, and broke away from it. So the bulls are going to want to hold here, really specifically here, which is a little below, but this area in general, and then you throw in the fact that it's also a high volume level, and the likelihood of them holding here goes up, just like it did here. High volume level, rejected, came back down to this high volume level. So we'll see if they can maybe come down and tag it on this one so the NASDAQ will flip. It's getting close. Guys, if you're interested, obviously with the coupon there for the monthly indicator, you also get a 7-day free trial if you sign up for either of our rooms. PT is incredible. You also have my room. If you want to come in, this is the type of stuff we go through on the midday call all the time. That I give the type of updates I give during the day, and the type of stuff you get, on any given trading day. And then on the midday call, we also go through all of the stocks, the Mag 7, Bitcoin, gold, silver, all of those types of things. And then any stock request that anybody has, we go through that as well. So there's a lot of value in there. There's a lot of learning in there. You also you get access to the Elliott Wave beginners and advanced courses. You get discounts that other people don't get. So for things like the Trade Waves Academy or the indicator or whatever. So if you want to check that out, you do get a 7-day free trial for that as well. So at this point in time, we will be, if we have a trade, it would be looking for a call. So if you want to have yourself ready for that, set up for a call trade. NQ has just moved into sell, so hopefully that holds. If this candle can stay down here, that will hold into a sell cycle so that we can have that. We'll look to see if the bulls can hold support here and try to push higher. I would suspect a bounce of some sort, whether they spike it through first or not. I would expect some sort of move higher off of this area. It doesn't have to be a big move higher. I mean, it can be, even just back to 520 and then back down. But I would expect them to try to bounce this level. The ADD is moving down, but still in a very bullish posture. The VOLD is still extremely bullish. So still seeing bullish signs for the day. Just seeing a little morning pullback here to back test. This last support area. Any reason you chose the SPY and not the ES? Just what I've always traded in my life, and I never got into the futures or did that. So that's just what I trade. You can trade anything you want. Maxime, you can email me, jacob@investwithjacob.com if you have a question. The Discord channel name is Invest with Jacob, but you need to sign up, and then there's a link once you sign up, and you click that, and it should take you right to the room. You don't care about all the news, the deadline for the China tariff in 50 minutes. No, I don't care. I mean, that might be a catalyst. I'm not here to tell you it's not going to be a market mover, but the outcome of what they say, I don't think matters. In other words, if China says, I don't know what are they talking about, reciprocal tariffs or whatever. If they say they're going to tariff us back or whatever, I don't necessarily think that makes the market go down. And if they say they're not, I don't think that necessarily makes the market go up. The thing is, everybody wants to blame this drop on tariffs when the 6,000 level has been forecasted for a long time for a precipitous drop. And I've been warning about potentials for drops for more than 4 years from this area that we dropped from before Trump was even talking about tariffs or a second term or anything else. So, they want to blame it on tariffs, but in my opinion, the market was always going to do what it's doing. And, yeah, that's just my opinion. I refer a lot of people to October of 2022 when we hit a 70-year high on inflation and the market rallied almost 200 points and then rallied to new all-time highs and a 6,000 target. Or when COVID was at its lows and unemployment was screaming and businesses were going out of business at the speed of sound, and the Fed had already tried 4 different times to stop the drop, that it bottomed at the support level everyone was talking about. Everyone who DDW that knew what they were talking about was talking about. That 2200 area. It bottomed exactly there and turned up. Oh, sorry. The COVID one. You know, if news mattered, then the market should have never stopped going down in 2020 until maybe a vaccination came out or whatever. But news, in the sense that news doesn't matter in the sense that good news makes the market go down. Good news makes the market go up and bad news makes the market go down. That's irrelevant. That is not the case. So we'll see if they are going to do. They came down into this next level of support that I talked about that the bulls really kind of want to hold here. Otherwise, they're going to come down into 512 next. Look, yeah, this area right here is going to be very strong. 513, 512. So they could come down and test that next if they can't reverse this one soon. But it is a little concerning for the bulls that they got a minor, tiny little bounce off of this and then plowed right through it. So the bulls are going to want to try to recover this, either this candle or the next. Otherwise, we're likely looking at another drop down to about 512.42. If they're able to recapture this high volume low here, that would be, I would consider this a failed breakdown of that area. And we would likely be looking at a trip minimum to 520, but more likely back up to the highs. So if the bulls can recapture here, you should look for a pretty decent move up. If they cannot, then like I said, 513, 512 is going to be our next area of importance. Sorry, I know you already mentioned. I missed the beginning of your video. Do you consider the top is in now? We went below the April lows. So that would be the primary, yes. There is still a chance for the bulls. I think it's a fairly low chance, probably 30% or so chance, that they can run this back up to the highs. However, any break of yesterday's low is a very bad sign for the bulls. You know, 527, I was kind of looking at 530 there as a potential. But 527 or 525, I guess they got to, sorry, 525, it's in the neighborhood for this to be the A leg. If we, let's go over to the ES real quick. Let's see what we've got on that. Yeah, so oops, the standard A of an ABC, um, and this is B here. So we're in ABC. So B leg is made up of an ABC. So you got A, B, C like that. The standard A leg of that hits the 382 retrace. Right now they came up just short of that. So about 53.73 would be what they were targeting. They hit 53.05, so they're about 7 points on the SPY short. So about that, like I said, that 530 area would have been fine. But it's not uncommon to see A come up just a little bit short there. So we'd be looking for the 382 overall. So if the bulls can continue today into this area, that'd be a really good A leg target. Then we'd look for a drop back and then continuation into this 56, 5800 area, and then we would be looking for the bigger drop down. You get a wave 1 of C, 2 of C, and then good night, Irene. So it's certainly possible that we topped in A and are pulling back in B now, especially given the break of support there. But again, a recapture of this high volume level would be indicative of a pushback into 530, 532. I would not be shocked to see that at all, with this being a 4-5 of C. So you got 3 of C, 4 of C, 5 of C. How many monitors do you have up and watching? 3. 3, and they're crowded. I have a live stream up. I have my trading screen up. I have my trading view screen up. I have my Discord screen up. It's a lot. That's why I accidentally made a mistake on that trade earlier. Called it a call instead of a put because there's just a lot going on here. Okay, so we've got a nice potential reversal candle here coming back up to try to reclaim this. So we are going to be looking for this long. I have a 521 strike right this minute. That could change, but right now I'm looking at 521. Oops, sorry, 517. Excuse me, not 521, 517. I was looking at where VWAP was and said 521. All right, back into that resistance level here. If they can get through that, then I do think the bulls can continue here at a minimum back to VWAP, but potentially through in continuation after that. Failed the back test here. Not a good sign yet for the Bulls. They can still try to hold and go back up, but this is not typically what you want to see. Do you know what percentage of trades you get stopped out on? Um, I don't because it's irrelevant, honestly. Does anybody know why it's irrelevant what percentage of trades you get stopped out on? Okay, let me rephrase that. Um, if you're just viewing it as do you win more than 50% of your trades, that is irrelevant. I don't know. I think we do, but it's an irrelevant concept. And if anybody can tell me why, I'll give you a bonus point. I don't know what that bonus point would be, but that's what you get. What stands out about your EW courses versus someone else? I can't tell you that because I haven't taken other people's, honestly. Mine is video based, short chunks, easily explained. Real life concepts shown on the charts. Explains diagonals and all of the more complex stuff very, I think, clearly. I have seen some people explain diagonals, and my frustration is that they're very vague because they don't, in my opinion, probably know about diagonals. They're just trying to explain them. So I can't tell you that, but maybe somebody in the chat can who's gone through the courses. I don't know. I put a lot of time and effort into giving you a lot of the things that aren't just standard out of the book EW, that are a little more modern EW theory that has changed a lot of how we look at the market. For instance, the advanced fib levels, the trade setups, how to use it to trade. That's the whole trade setups module is a um, valuable module all on its own, in my opinion. But again, I can't speak to other people's courses and what's totally different because I don't take other people's courses. Let's see. Smaller losses on stop outs. Close, Sean. It's risk reward. I mean, how many trades you win or lose is irrelevant. So if I have a trade line here, right, and my risk, and I have good setups and it's reasonable. You can't just say my risk is 1 and my reward's 1,000,000, and I have a 3 win rate if I hit my target, and I have a 1 loss rate, meaning when I lose a trade, I lose 1 unit. And when I win a trade, I win 3 units. I only have to win 1 out of 4 trades to break even, because on that 1 trade, I win 3. And on the other 3 trades, I lose 3. So it's a 25% win rate. So it is really absolutely irrelevant, the percentage of wins and losses, as long as your risk reward is right. And clearly, over 2 years, I've proven that mine is. Six out of 10 trades is all you need to be a winner. That's incorrect. Hopefully you just listened to what I said there, because if your risk reward is wrong, 6 out of 10. I know guys who can win 9 out of 10 trades and lose because they take a 10-cent win because they think that's great, but they don't know how to set stops. And I know people who win 2 out of 5, 4 out of 10 trades and are extremely successful. That's why it's important to understand trading. Trading isn't about having more wins than losses. It's about understanding risk reward. It's about using stops. It's about discipline. If you understand all of those, that's why Trade Waves Academy is such an incredible course, because it teaches you how to actually trade and understand trading. It's everything that Elliott Wave isn't. So the Elliott Wave courses teach you Elliott Wave, and then Trade Waves Academy teaches you everything that goes along with how to trade those waves and how to trade. It's not about Elliott Wave. It's about price action. It's about mentality. It's about risk reward. It's about options and how they work. It's about support and resistance. It's about failed breakouts and breakdowns. It's about all of the things that you need to know to trade and be a winner and be a great trader. And it's it was a live course that I taught. There's tons of questions and answers in there. It's 2 hours, 10 2-hour sessions. If you're concerned only about the number of wins and losses, then it's a great course for you, because you need to really go through and study that. And that's not a knock on anybody. A lot of people have that same thought because nobody teaches that kind of stuff. But if so many people are concerned with, you only won 50% or 51% of your trades or 49, whatever, it doesn't matter. None of that is relevant. I mean, I could quickly find out. I could run a pivot table on my data and tell you. But it's not a valuable stat. That's why I don't have it. The biggest here, I'll give you a tidbit from the psychology portion. This is just a small thing, but it's a small tidbit, but a huge thing in psychology. So you should know. If you don't know, well, let me just ask a general question. Why do we go down faster than we go up? The reason we go down faster than we go up is because fear is stronger than greed. People are afraid of losing everything more than they are greedy about making money. So if fear is stronger than greed, when the market starts to go down, people panic. When the market's going up, everybody's like, cool, I'm making a little more money. That's okay. I don't mind. I'm not going to put a whole bunch more money in to see if I can make more money, but I like that my money's going up. That's great. Oh, the market's going down and I'm losing money. Let me take it out right now. Okay? So that's the first thing to understand. The second thing to understand is, now when you're trading, you have to know in your mind that fear overpowers you, and you have to get in control of your fear. And so what happens is people enter a trade and they start to win, and they have a very small win, and they're afraid that the trade is going to turn against them, so they take a very small win. Instead of taking a little bit off at your, knowing what your targets are, having a trading strategy, and letting it play out the way it's supposed to play out. They get afraid that they're going to lose whatever little gain they got, so they take a little win. Okay, so they never reach the full potential of the trade. And then, let's say you were in this trade up here and you happen to stay in and it got down and you got out right here, right? And then the market continued down. Well, you missed out on all of this. Instead of selling half here because this is support, right? You sell half here, that's support. So that's a good place to sell a little and then let the other half run. And look, you made all this rundown, right? So, so when that happens, you lose out on a ton of gains because of fear. Conversely, as soon as you start to lose, you also take a loss because you're afraid it's going to continue to go against you and you don't let it hit your stop. So you're never experiencing any of your risk reward. You're experiencing all fear-based trading. Fear-based trading will absolutely cause you to lose money 100% of the time, every single time. If you are afraid that your trade's not going to work out and you take money off the table, you have cost yourself money in the long run. Maybe at that particular trade you were right, but over time you are not, because you have destroyed your risk reward and turned yourself into a one-to-one trader. If you turn yourself into a one-to-one trader, then you do have to hit 6 out of 10 trades to just make a little bit of money. And you have to hit about 8 out of 10 trades to make any money. And this is where people go wrong. Fear crushes traders. You have to get out of the fear-based trading mode. It's not the reason I asked the question. I set my stop at a different level and get stopped out a lot less. That's not why I asked the question. That's fine. That's perfect. Your risk tolerance can be what your risk tolerance is, and that's good. I always tell everybody, I said at the beginning of the video, you may have set your stop above this and have a bigger risk tolerance than me. I don't. Because I know what my trading style is. I know what my risk reward is. I know how I trade. Everybody's allowed to trade how they want. I don't care that you do that. That's great. Good for you. But in a general sense, a lot of people have that same question for that same idea, so I did want to explain that concept. And I genuinely, I hope that didn't sound like smartass. I genuinely mean good for you, like good job on that style. It's just one that's different from mine, which is going to be infinite. There's infinite trading styles different from mine. Sorry, you asked. You said the question was not related to percentages. I'm pretty sure the question was what percentage of your trades get stopped out. That's why I answered it that way. I am not a successful trader yet, but since I've been using the indicator for a little while, I've already seen that if you follow it and look to trade the major intraday time pivots, you will win. Well, good. I'm glad to hear that, Chris. That's awesome. Remember, guys, the 30% off the monthly 30 coupon does end at the end of the stream. So make sure you take advantage of that if you want to do that. I realize today has not been our favorite trading day, but that is how trading goes. And it's a great example. Having days like this are a great way to explain how trading works. All right, back testing the HVL again. Still not able to get through just yet. Okay, there's our buy. We're getting in at 518 at 344. We're going to set our stop to 517 even. We'll see if we can get some momentum back to the upside here for the bulls. $4.12 will be our first take, assuming we can get there. All right, let's get that squeeze going here through the 21. What time did you guys say that China knew what news was? That can be a catalyst here for us, one way or the other. The 21 will be key here. They've hit it and pulled back a little. We need it to get on through and get up to VWAP, and that should get us to at least our first take. We definitely don't want this to turn red. That would not be a great sign. So you're battling a couple things here. You're battling this breakdown candle right here. So this red, they came into the HVL, they bounced it back up, and then this one broke down through. So this high is important on this candle. You can see the little 5-minute ledge they built here. They spiked through it and couldn't close above it. Now they spiked through it again or are trying to close above it. So that's going to be one area. And then the 21 is the second. If they get through that, we should be up into this next area at 518.90. And then on into VWAP here, which comes in at this breakdown candle here, which is also a support or a resistance zone over here. So they'll have to get through that. They're trying to keep this candle alive. We'd like to see it close up around this wick, or above this candle would be perfect, but up around this wick or higher would be best. Indecision candle here. Above the high is great. Moving on. Below the low could lead to some problems. But again, they still need to get through this area and then the 21. And we should start to see acceleration after that. It is positive that they have an indecision candle and they're eating up the wick here quickly. That is a good sign. Now they got to get through the high. All right, they got us there at 303. Wouldn't mind a pullback here that enters a sell stop or a buy stop and then another buy signal initiated. I do think the bulls have a chance to build a setup here. The rejection off the 21 like this, come back down into this area, and then build a move higher. So a buy stop would be okay here for me. I might look, well, if we get it, and then if we get a buy after that, that would be a decent entry point. This candle here was tough. They needed to close this one better to continue. But what you will likely get on the 5 minute, I don't have the MACD on this chart, but you'll likely get a positive divergence if they make a low here. So I was going to do this trade and end the stream, but I think if we get this long stop here, we'll it's an interesting spot. I wish they would have held that long stop. That would have made me happier. Nasdaq did get a stop. ES didn't. I trade my own crazy way. A trading buddy said news comes out at noon, could be viciously bearish, so I used the minute chart to reshort at 518. If everybody thinks it's going to be viciously bearish, I would caution against that. I also don't think it's going to be. We'll see what the chart says or does when we get there. I know everybody's worried about the China tariffs or whatever, but this market, again, needs time to heal before it really craters. I don't think one bounce day is enough, especially one fleeting bounce day where they've given back 1% of it. Mr. R. Jacob, this indicator is amazing. If anyone is on here thinking about it, get it. I appreciate that. Thank you. It's not the best day for it, that's for sure. But these are days, I'm actually okay with that because these are days where you can kind of show the idea of how trading works. You know, every day is not a winning day in trading. It is not a realistic view to think that any tool is going to give you 100% trades. But hopefully in learning about it, looking at the overall results, and you know, this today, I mean, obviously, if this trade is one one candle off, we have an amazing day. But again, that's part of it. That's just the way it goes in trading. And I know somebody like Gooner for Life probably had his stop high enough to catch this, and that's awesome. So I know some people used it and made a lot of money today. I, on the other hand, didn't. And that's all right. That's just a day in the life of trading. Now we have the long stop here. So any kind of low, I think, would give us positive divergence. course, that can be wiped out. But I would expect a little bit of a push higher here. Even if the bears were looking to push down, you have an A, B, C, and then you can start down. It's certainly possible that this can be a 4-5 as well. So where this is 4 and 5 of C, and then you get a bounce, and then back down. Or it's a bigger wave 4 of the move up. So your A leg has an A, B, and then a 1, 2, 3, and we'd be here in 4, and then a 5 before you turn down. They cannot hold this long stop. It's kind of annoying. I kind of expected them to come down and test this and go, but we'll see. The NASDAQ did stop, so if it flips back to a buy, I may re-enter on the NASDAQ's buy signal. Oh, and there it went. So we're going to stay at 518. We're going to go cheaper here at 247. I'm going to enter here. This is obviously not a trade supported by the indicator, so this is my own personal trade. You got a retest of this low, a bounce, and then the NASDAQ did flip back to a buy. The ES never obviously came out of this buy. You haven't had the stop hold yet. Oops, our stop is wrong here. Our stop is going to be 5. What do we got? 515.50. So we'll go to 514.75. We'll see if the bulls can hold here. Give us one more test of the 21, which would be great. That would be a winning trade. So 98% of the trades we take in the room and that I take are indicator based. However, there are maybe 2 or 3 a month that I take on my own just because I can see what's happening, or I think I can. This is one of those cases. 24 is 48, which is 95. 295. We'll call it 295 or $3 right around there. We'll take our first part off if we can get there. So it's somewhat indicator based. Like I said, the NASDAQ flipped sell and then gave us a long again, but the ES never came out of its buy. So this is me taking a trade just based on some back end knowledge and my own thought of what the chart was doing. Hopefully it works out. A back test of either the HVL or the 21. Both would be, I think, winners. We're pretty close to taking some off here anyway. The HVL has now become a little bit less of a problem. It's now the 21 because they tested the HVL in the pre-market. They moved through it here, moved through it here, moved through it here. So the support resistance here is no longer really very strong. I think those days teach you more, especially the new traders. I hope so. I hope that people understand that stop losses are extremely important, and you know that there are days that don't go your way and how to emotionally handle those. Those are really important lessons that if you can take anything away from today, please take away that 3 things. 1, every trade's not going to be a winner. 2, you must have good discipline in trading. And 3, you must have good setups and good risk reward, and you must have a plan when you trade. If you take anything away from today, take that. If you did sign up for the indicator, I can see I have a few signups here. I appreciate that, guys. Thank you. I will get you set up as soon as the stream ends. It's just hard to do all that right now. All right, close half there for $3. Hey, we got a winner. There we go. So again, this was somewhat indicator based as the NASDAQ flipped to a stop and then back into a buy. So we took the buy on the NASDAQ. I realized you can't see that on this screen, but that is somewhat indicator based, at least as to why I took the trade. But then I shared it all with you, and that's the value of my live room too, is that if you have the indicator, you'll do well. But if you have the indicator and the room, you'll get a trade like today that gives us a win. When it wasn't necessarily there on the chart. So now we're going to go ahead and set our stops to 240. We'll see if we can get them to finally run out of here. I do think you need a C wave up here, but maybe, is it noon? 9 o'clock. All right, here's the news. Let's see what happens. Does the indicator look at volume for making some decisions? A lot of decisions. Volume is a major player. That's why high volume levels matter. Support and resistance matters because those are all volume related. It looks at I say 150. I think it's 172 different things it has as inputs that it looks at simultaneously. And, some of the lower level things are like moving average crosses. That contribute maybe 1% to are we going to get a buy or sell? But like the much heavier contributors are going to be support, resistance, price action, volume, momentum, things like that. Oversold, overbought. Nothing's really happening here at noon Eastern time. I think there's supposed to be an announcement or something. Maybe it hasn't happened yet, I'm guessing. Somebody in my room mentioned they did not see the buy on NQ. So if you have the indicator and you go to the NQ, you have to change your inputs. So right now, if you go to the NQ, you're not going to see the buy signal because it's still looking at the ES for confirmation. But if we come in here and change our setting to the NQ, you'll see the buy right there. So that's why you don't see it on here. That's not what I meant to hit. Oops, that's not what we want. Let's go back to the SPY. All right, still hanging in there. They came down, got close to our stop here, but hasn't stopped us out yet. I'd like to see them push through that HVL and squeeze a little here. That would be ideal since we're long. But also structure-wise, I would like to see that. I think the structure will allow for that. If they push back through the HVO, I do think we will squeeze and accelerate. That's a big if. Musk called Navarro a moron. Maybe this is the news. Funny. I changed the ES for ES. You need to do what I just did. Zamanzis. I think I said it right. Probably not. Sorry if I didn't. There we go. Let's push now. And showed it here on the video, so you should have been able to see it. Rookie options questions. How do you determine a size to respect your typical risk? I guess R is risk, since you are looking at SPY values to enter, exit, but trading the options, which can move way fast and creates higher risk. So for size, if you go back to the beginning of the video, you can always replay the lives. I talk about how I set up size, and it's for an example. The example that I use is we base it on a 100K account. You should be using 1 to 5%, with on days like this where the options are overpriced, using closer to the 1 to 2%, and on normal days 3 to 4%, which gives you $1,000 to $2,000 worth of options, or $3,000 to $4,000 worth of options based on a 100K account. And then you set up your targets and stuff from there. So, but to get that more detailed, you can go back to the beginning of the video. So they tried. The 21 is still holding us down. So no acceleration yet until we get through that. If we get through that. That looks like a not good candle coming in. Spike high and reversal. They need to hold here. All right, so we got stopped out there, 240. Our first take was $3, so we get 270 average exit. That counters one of our losers for today. All right, we'll wait another minute or two here and see if the news gives us any kind of movement, so that we can see some kind of entry. If they can push down a little to get a stop on the ES, and then a buy stop on the ES, and then give us a buy, we may take it. Otherwise, we'll probably shut it down. I'll give it another 10, 15 to see if the news gives us any kind of help there. Okay, great. I'll do so. It's kind of a second risk management limited trading position globally. So it's kind of a second risk management limiting trading position globally. I think so. I'm not exactly sure what you mean by that, but I think so. Jacob, you are great, calm, knowledgeable, and feedback are of great value. Thanks for sharing your expertise. I appreciate that, Maxine. Thank you. It took a long time to get here. I'm not going to lie. I was a very emotional trader in my 20s. And like I said, I blew up accounts and it cost me a lot. But I learned a lot of valuable lessons and was able to take those and apply them. And that's really what trading's about. You know, a lot of people have a day like today and they panic or chase or try to double down on the next trade or do whatever. And there's just not there's not any reason for it. You have to understand that if you have a small account, you're not going to get rich tomorrow. If you have a big account, just concentrate on growing it. Don't try to get super rich tomorrow. If you just play the game properly at the end of the year, you'll be very, very surprised at the difference in trading. It's a game changer because you'll take a million risks trying to get rich overnight, and you'll lose all your money. And you'll take a lot of small risks, and at the end of the year, and a year is nothing, especially if you have a kid. My daughter's 7. All of a sudden, like I all of a sudden, it's crazy. A year is nothing, and at the end of that year, you'll have a bigger account, and then you can trade more options, and then it compounds, and then you have a bigger account, and so on and so on. So, it's all about controlling yourself. All the information's out there for everybody. You're a less emotional trader now, still in your 20s. I tried to be this weekend. My nephew turned 21, and hanging out with that group was rough. I mean, I kept up during the night. It was the daytime when I woke up that was the problem. Vegas at a 21-year-old's pace is rough for me. We missed you Thursday and Friday. Your guidance calms us. Yeah, I woke up. I kept an eye on the market Thursday. Obviously, we closed one short and opened another for that uh, move down, and so I did that on Thursday, and then I woke up Friday and I was like, oh my goodness, what is happening? So it was those were crazy days. That's how it goes. Every time I get on a plane or take a couple days off, the market just absolutely gets eviscerated. Whole bunch of chop right now, up and down this little range here from 517 to 515. Not quite 515, but right in there. I know that on the chart it doesn't seem that way because you're looking at, this part of the day. But the Bulls still have the advantage today. It's still a 2.5% up day, and it's still very green, and the ADD is still very positive, and the Vold is still very positive. So trying to short today, unless you did it from the top, which we tried. It didn't work out. Trying to short overall today may be a problem. As I've explained, I think the market needs at least a week or two to heal, minimum. Doesn't mean there won't be a B wave down and some down moves in that time, but it does mean that I think we have a low for a minute, and it's a short minute. I don't think that low's the low. If it is, you'll know pretty soon. But I do think the market needs to recover from being oversold to levels that we haven't seen since COVID. And the only time in history we've ever seen levels this low on the MACD and oversold status was COVID. So for a 2-day run, that's a way oversold status, and the market just generally isn't going to continue on that kind of trajectory. I suppose there's a first time for everything, and if it's a crash like COVID, which I think is coming but not yet, I think, then obviously it can go lower because COVID did. But when you get to these levels, generally you should be looking for a little bit of recovery. Not like all-time highs or anything, just the market needs to recover. The indicator includes your vacation itinerary for the following months. Well, I mean, that's really why one of the reasons that I built the indicator was so I don't have to be glued to the screen trading every single day with everybody, so that you guys have a tool that understands when the trades come in, why they come in, where they come in, and can trade on your own. And eventually that will be my retirement plan, that you guys have the tools you need to trade. And then I would probably make my Discord a free environment, and just pop in, a couple days a week, something like that. But yeah, that's the point of the. I mean, while I was gone Thursday and Friday, if you go back and look, it was all over the ups and downs. Huge fan of Jacob, or hug fan. That's what you typed. I think you meant huge, but I'll take either. I'll take the hug and the huge. Thanks, Banks. Let me switch charts here for 1 second. I'll go to the 5-minute SPY. I thought they would have tried to create divergence here on that, or would have created divergence there. I guess they didn't have enough movement to the upside to get there. Where is this? That's from yesterday. I was looking to see if they had 5-minute divergence on the SPY or not. Now this breakdown here, because they're breaking down below this area, is coming into a key support from the overnight, but it is a ugly look here. So you see that when they break the opening low, that's always a tough sign. They came down to the support line we have here, held that, bounced, held it again, and now we're trying to break through, and that does leave a lot of open air here. But if we go back and look at the other chart here, they do have some support coming in down here. They're just kind of entering it right now. So this whole ledge that they built around 512 is a critical support ledge that they should try to hold. If they don't hold that, then we could see them unravel a little bit. The gap close would be a really nice B wave here, so that would not be a terrible sign. And then of course you could have this as a 4 or 5. So it's more likely a 4 or 5 if they hold here. different than that if they don't. Can't seem to add an alert to the indicator. So you should be able to go in here and click on the three dots and hit add alert. And then these are the alerts you can choose from. You can sorry, these are buy, sell, short, stop, buy alert and stop, sell alert and stop. You can get all those. All right, they are coming into this zone here of support. So we doing, and the hourly 21 is also sitting right here at 512.15. So that is also going to be a point where we'd look for the market to bounce. This must be on fairly low volume because the ES is not wanting to give up this buy signal here, which is really odd. Means that the move down's fairly weak in terms of the indicator's values. The NQ's off and on trying to stop out, but the or create a stop, but the ES is not having it. It's always an interesting thing when I see that. Yeah, maybe try to uninstall and reinstall it, John. I'm not sure. So they are coming into the hourly 21. They are getting far away from the 5-minute 21. So we'll see if the bulls are able to find support in that area. We are getting a long stop here. So we might take one more buy. We'll see if we get one. And do that, but bulls do need to step in. If this long stop holds, we will see if we get a buy signal coming because we are coming into some heavy support. Also the pre-market low. At least the SPY's pre-market low. Do you constantly adjust the strike and expiration? So for day trading, I always use 0 DTEs. And for the strike, usually I'm at the money. So if right now we're at 512, so I'd probably take 513 as my strike. But because options are so expensive today, I might take 514, just kind of depending on pricing. But overall, it's a usually at the money, as long as, right now we're in a high volatility environment, so the options are super expensive, so it's a little different. And remember, guys, when I explained this earlier in the video at the start of the day, when options are way overpriced, you need to size down. Don't trade what you'd normally trade because you're trading essentially. So the first options we took today were like $5 and change, and normally you can get options for between a buck or two. So we'll call it $1.50. So you're paying 3 times the amount. So if you keep the same size, if I kept 25 contracts at $5, then I'm paying 3 times my investment to get in for a trade, which means if I lose, I'm losing 3 times what I normally would. And we don't want to do that. And while I understand the reward on the other side is 3 times the gains, if you have a day like today, you don't want to be punched in the face like that. So size down on days like this, and always remember that there's another trading day tomorrow if it's too expensive. That looks like 5 down from the high, potentially. You do have potential for this to be a 5 down. The top isn't very clean, so this up here is ugly. A lot of overlap, but that can, could be a diagonal or work itself out that way. It's just not ideal. All right, we got the long stop locked in. I'm going to give them about 2 more bars here till we'll go to 535 to see if they can find a bottom around here. Maybe 540. I got the 10 o'clock. I have to do a live call. So we'll see if we can get a buy signal to take. All right, there we go. 337. We're going to do 513 as our strike. 337 is our cost, and our stop is going to be 511.90. That gives us a little room below the 21 on the hourly, where we would expect them to hold for at least a bounce. We'll see if this one works out. If it does, awesome. We'll play it till we're done. If it stops out, we'll call it for the day and move along. So 33 is 66. That's 943. So 405. 403 is technically it, but 405 we'll call our first stop, or our first take, I should say. Excuse me. So if we flip over to the hourly real quick, they should be bouncing off the 21 on the hourly. Precisely. So that's, remember the 21 is always a valuable moving average on every chart. 21 exponential moving average is always going to be someplace you're going to look for bounces and or rejections depending on which side of it you're on. In this case, we're coming in from the top, so we're looking for a bounce. Engulfing this candle is good if we can stay above it. There we go. Keep going, almost there. All right, close half for 405 right there. That's a winner. Let's put our stops to 350. Nice little comeback story today. Let's see if we can make it a good comeback story and let this thing run. All right, let's move our stops to 360. Oof, that one was ugly. Got out at 340 there. So that stunk. But we still made money on the trade. Stopped 340. Average exit will be 65, so that's 33. 377. 370. Sorry, 373, right? Yeah, 373. So, okay. So not overall, 3 losers, 2 winners. Down, I don't know, like 40. I'd have to do the math real quick, but down about 40 cents on the day. Like I said, that's how it goes. Yesterday we were up over $2. Today we're down 40 cents. So I don't think that's terrible, given the bad luck we caught up here on that spike, and then the bad luck we caught with this cost us 20 cents. That was a very rapid spike, so kind of shitty. Or 10 cents, I guess, in the big scheme of things, but that's all right. All right, guys. So remember the code. You got about 30 minutes to get the indicator. After this, I got to give everybody access who already got it, and then go from there. And for everybody who's in my room, the live call will be at 10. And look at this spike down, these jerks. Yeah, and so hopefully, I know it wasn't a great day for trading, but that's part of it. I hope you learned a lot on the stream, took away some valuable lessons, and hopefully you want to be part of our team in the indicator. Thank you guys for joining. I really, really appreciate it. We'll be live next Tuesday, and we'll see if we get a better day next Tuesday. I do overall expect the market to bounce, and any break of yesterday's low should be considered a big warning to the bulls. Checking later. Hopefully the website is back up and my website's not running. Hold on a second. It's up. Maybe you're talking about a different website. All right. Thanks everybody. Talk to you next Tuesday.